I'm being really honest, I've really struggled with this pitch.
Everything that you've done so far is spot on.
I think you could probably learn from me.
I think this development, unfortunately, is the definition of risk.
I think that's a bit harsh.
We're going to offer based on a lease option, so we're going to offer them a lease.
What?
Property Elevator is back and we are bigger than ever. This year, we see our angels looking to invest their hard-earned cash into some of the best property deals on the market. Will our angels be keeping their lights green, or will they be turning them red? And to shake things up, I'd like to introduce you to the lender, who'll be giving their insights into how these deals could potentially be viewed from a lending perspective. Our angels are seasoned developers, mentors, and investors with a combined experience of over 100 years. They are Paul Mahoney, Ranjan Bhattacharya, John Howard, Hayley Andrews, and Nicholas Wallwork. Unlike the angels, our lender, Scott Marshall, can't shake hands on any of the deals. So, it's up to our candidates to impress one of the 5 angels for that all-important guidance and cash. So, let's meet some of the hopeful candidates pitching their deals on today's show. Kirk, hello and welcome to Property Elevator today.
Oh, I'm so excited to be on the show. Thank you for having me.
Oh, it's brilliant to have you. So tell me firstly a little bit about the history and the backstory of you and property. Do you have much experience at all?
Yeah, so I started off in property about 10 years ago when I left the military. I was in the army for 10 years, and when I came out I started working as an estate agent actually. And then since then I've started on my own property journey, buying properties for myself, for my own portfolio.
Okay, well good luck. We're going to send you up now and I will chat to you when you get back down, but I hope it's a good result for you. My fingers are crossed.
Thank you.
Take the stairs.
Hello Angels, my name's Kirk Shepherd and I'm here today with a development opportunity in Preston, Lancashire. The development itself is 307 apartments and it's over 22 floors. It has parking downstairs as well for about 250 vehicles, which is great for that location. The money I'm actually looking for an investment is 2 million. And that's going to be broken down into 2 parts. 1.7 million for the purchase of the land with the planning permission, and then the 300,000 is to get the first month off the ground before the development finance kicks in. Preston's a great location as well. I was posted there probably 13, 14 years ago with the military.
Kirk, thank you very much. It's great to see you.
Just some questions around the proposed sale prices. So it seems that the expectation is to sell the 1 beds for around 200,000, the 2 beds for around 275. Just wondering, how much research have you done on comparables in Preston?
Yeah, so in terms of the comparables, the person that we're actually getting the development off is an estate agency there. So they've obviously given me their numbers, maybe slightly inflated. I've done a bit of market research, which I've added to the pack as well. I feel them prices are achievable.
I suppose I'm just a little bit concerned that the average flat price in Preston is £90,000. So it's quite a lot more than the average, but obviously it will be higher than average quality. So it's only the agent that's selling it to you that you've looked at comparables from?
No, so I obviously, I'm an estate agent as well. So when I left the military 12 years ago, I went into a estate agency. If you actually look at Media City when they built Salford, I sold a lot of them apartments off plan when that was done, and it was a similar situation. If you looked at Salford at the time, you could buy a terrace property for 30 grand. As soon as the BBC moved in, they threw up the high rises in Manchester, Salford. The prices went through the roof. It was a 2-year build. We were selling stuff at 200,000, and by the time it was built, they were reselling close to 300. So the investors that got in early on them.
Well, that's when the market was hot.
Yeah, it was.
The market was hot.
Also, you had the BBC move in.
Yeah, I think the UCLan, the university, is very popular for international students. So I think getting it out there's a lot of HMOs and student accommodation. I think if we tie in with them or get the sales agent to tie in with them, they can pull the international students.
Just on obviously the flow of sales, have you done kind of, you've said you've looked at your comparables, you've got, you've priced yourself correctly in terms of the product you're putting back to the market. Have you looked at the flow of sales in that area? What's it look like? Who's your competition? Who's your audience?
Yeah, so the great thing with this site and this development is it's the first of its kind, and I believe once that goes up, that it's going to end up like Manchester. You see it driving into London. The skyscrapers are constantly throwing them sort of buildings up. So once that happens in Preston, it's just going to be a chain reaction. The beauty is, because you're the first one up, as long as it's done to a very high standard, that is going to be the pinnacle.
But is there an audience therefore? What research have you done to identify that people are prepared to pay, 100 to 150,000 pounds more than what the average property, you said 90,000 pounds?
Yeah.
Is selling in that particular area?
Yeah, it's more from an experience point of view. We have done the research, but as I previously mentioned, in Salford, I know it's a different location, but it's still the northern powerhouse, so to speak, with all them cities under that belt. But yeah, I think with the international students, you tend to see a lot more money, people coming from China, the UAE, to study and to pay that sort of money.
Yeah, okay.
Can I lead on from your pension fund comment there, if I may? What sort of yield are the pension funds buying at? So you're assuming that you're going to rent these out on the buy-to-let market and sell them as tenanted investments to a pension fund, or the whole block? Sorry, was it the whole block?
The whole thing. You'd probably try and retain the freehold or sell the freehold as a separate lot. It depends what strategy the pension fund's looking at. They might want to keep the freehold and the building.
I think that if they're buying the whole building, they'll want the freehold, without a doubt.
That's Nicholas, that's basics, mate.
Yeah, absolutely.
Come on, basics.
Well, he wasn't aware of that because he was talking about selling it individually, so it's not necessarily basics for everyone. There was a value to the freehold a number of years ago, but they've tightened down on freehold selling leases, and it's now
zero.
Much harder to make any money, or any, exactly. So by selling the whole block, your issue is going to be the discount a pension fund's going to want by buying all of those apartments. It's going to be at least 10%, it could be more, and on a site of this size, the percentage profit margins are sometimes less than £1 million commercial conversion, where you might be lucky enough to get 20 to up to 30% return on GDV. But here, it might be a little bit less percentage, but the cash value is still going to be huge.
Kirk, I admire your your ambition. 22-floor building, I think that's the tallest building anyone's ever pitched on Property Elevator to date. What I wanted to get to, because we're talking here about a 25 million build cost to build 307 apartments, 11% interest per annum, and you're saying we're going to deliver it in 18 to 24 months. That requires a serious level of experience in doing these mega projects.
That's why he's here.
And I just wanted to know a little bit about your background in that area, in delivering projects of this size.
Yeah, so this would be the first project of its size for myself. But in terms of the network that I've built over the last 10 years, there's project management companies, which are obviously that's where the figures have come from today. And they've obviously got experience in that field. And that's where the figures and numbers, so the 18 months, the 24,000 or 25,000 build cost, it has all come from the professionals in their own field. So I'm not under any illusion that I'm just going to walk in and start project managing a job of that size. I know how difficult project managing multiple buy-to-lets or multiple renovations is, because that's what I currently do now. So it's just having the right people in place, and hence the reason I'm here today.
My turn. As you might know, out of all the people here, I'm the only one who's developed tower blocks. So I'm the person you need to concentrate on, Kirk, to be quite blunt about it, because I can't see this other lot doing anything. Okay, so we have a situation where, what is the square footage of the block?
The whole block in total, square meterage, good question.
It's a very basic question, Kirk, and one you should know if you're coming in here looking for this sort of funding.
I understand that. I don't even know if I put it in the pack, but I can find that out.
Okay, well, you should know it, with all due respect. So 25 million build cost sounds very light for 315 flats, yeah. So who's giving you those figures?
So that's coming from a project management company that I've worked alongside before, and they're the go-to guys. So they're 2 ex-military guys that have set up the project management company, and I know them from.
Well, I spent 26.5 million on 150 flats, and the shell was already up 2 years ago. So I really want to talk to your guys, because if they can genuinely do that, then I'll be very surprised. How much have you got in for consultancy fees?
They've gone for the whole package with the management company's 300,000.
Through nowhere near enough.
That's nowhere near enough.
Nowhere near enough, Kirk. Well, I say that, I spent 850,000. So you think you've got the whole thing financed apart from 2 million quid?
I spoke to the broker and he said something on this scale, as long as the right people were in place, could be 100% funded, but in obviously intervals.
So really admire the fact that you've come in with a deal of this size, with the ambition that you've got, and pitched it in the way you've pitched it, and you've pitched it very, very well. Going back to the size of the scheme and what you're looking to do, a scheme of this size really needs the collaboration of a whole team of experts, whether it's architects, M&E, whether it's structural engineers, lenders, investors, developers. But one of the things that's really important is to understand how a deal like this is likely to be structured by a lender. Okay, and what's called the capital stack is going to be very important in terms of the structure. So if you've got a purchase price and a build cost that together come to about £27 million, okay, if I've got my numbers right, then you're going to have a mixture of senior debt, maybe stretch senior, mezzanine, preferential equity. There's a whole what's called a capital stack that people are looking for in terms of getting returns. So the senior lenders are likely to charge 4-ish, okay, over what's called SONIA, which is not dissimilar from base. The junior lenders are likely to charge 10 to 12% over SONIA or base. So the costs that you've put into the pack of around 11% for development finance, what you should be looking for is actually the total blended cost that's going to make this stack up. And probably from a blended perspective, you're looking at a much higher figure.
What do you have in the numbers for the cost of sale for selling these flats?
Yeah, so normally an estate agent's going to look for 1.5% as a sales fee. I think we can negotiate that down to 0.5%, maybe.
Not for off-plan sales?
No.
Off-plan, they'll want 5, 6, 7, 8% for you to sell anywhere near this number of units.
Okay. I think
I'll say where I am. I think this development, unfortunately, is the definition of risk. Getting involved in this as an angel or even yourself, there's going to be personal guarantees involved. We're talking tens of millions of pounds. If it goes wrong, you lose everything. And I also think there's a big risk that when this gets to, if it gets built and you do sell them overseas and through those types of agents, there's a huge risk that it will massively undervalue because of the lack of comparables in the area, and that means people won't be able to get mortgages. So for all those reasons, it's not one for me.
Thank you.
Ranchan?
I honestly don't have faith in the figures. I can't.
Well, you don't know where Preston is either.
I can't believe we can get this developed in 24 months. Such a big scheme. You're relying on 25 million of debt. That will spiral up as the time frame goes up. I just don't see it. And I also don't see I could get it if you said, listen, we've built 3 or 4 schemes of 50, 60 flats, and now we're doing this. I can get that step up. But to step up from 0 to 307 flat, 22 tower scheme, I think is a bit too much of a jump for me to want to commit to. So for that reason, I'm not going to partake today.
Thank you.
Hayley?
Yeah, so I kind of agree with the guys. I think this is an ambitious project for you first kind of, high rise. 307 units. My worry with this is the build costs are too low. Your project length is not long enough. Oversupply for the current demand. I understand, regeneration is going to obviously bring people to the area, employment, and that will improve. However, I always look at it, what is it right now? It is the definition of risk. So for that reason, great pitch, love you, but it's not for me.
Thank you.
Nicholas?
It's too big for the current market. However, you came up and you are really impressive and you're highly investable. We always say on the show, bring a deal that's big enough for the angels. You've certainly done that. Regrettably for me, it's a bit too far the wrong way. But fair play to you for doing it, and thank you, you've been brilliant. So.
Thank you.
Kirk, that leaves me, I think. So, you need to go back, get the planning sorted out for another 3 years, give yourself the breathing space. It will take 9 months to get this started. By the time you've gone out to tender, got the tenders back, sorted out the funding, it'll be a good 9 months. The other issue you have is that you're looking to sell half the block and rent half the block, which makes it a rental block. The flats will be downvalued because of that. So you've got to make your mind up what you're doing. You're either doing 2-3 things in my view. You're either selling them all off, as owner-occupiers, which is unrealistic in Preston, I would say. Sell half off and half not. And that's unrealistic because they'll be downvalued in my view. The best deal here is to find an American fund or a Canadian fund to pre-fund the whole scheme for you, okay? So there's no interest costs then whatsoever because they'll pre-fund it and then they'll fund it as the process goes through, and then they'll buy it off you at the end. And they'll pay at the moment about a 6.5% yield. However, I can make this small deal fit for you so it works over a long period of time if your build costs are right. So what I'm going to say to you is I'm willing to help you. I can't help you today, but if we go away, it's all about making the deal, putting the deal in the correct way to the correct people, and then see whether we can find a fund to fund it from day one. So it's a no from me today, but there is potential.
Thank you.
Thank you very much for coming today. It's a no today, but speak to me afterwards and let's see if we can help.
Thank you very much.
Thank you.
Pleasure.
Thank you.
Thank you.
Thank you.
I thought you'd have done that one, John.
I thought that was right up your alley, John. Why don't you go for
Well, that's why it needs to be rejigged. It totally needs to be rejigged, and then there is an opportunity, and I can borrow the money with no personal guarantees on that.
Wow.
So that is the key, and I think I can borrow it at about 6.5%. So off the government. So that makes it much more doable, but the difficulty is I don't think the costs are right.
No.
No.
I mean, I don't know who his QSs are, but I want to look into that.
Oh, Kirk, not quite the outcome then that we'd hoped for, but how are you feeling?
Yeah, it was absolutely great experience. They were obviously all lovely, and I got some great information from them as well.
Great. So what's the main takeaway you're going to take from that conversation and experience?
Yeah, obviously keep thinking big, make sure you've got the right people in place. There was quite a lot of interest shown as well, even though I got the red lights as such. But yeah, just keep listening, keep learning, and yeah, that's
brilliant.